Thousands of new indicators are created every single day, and it's easy to be overwhelmed with the number of indicators that your trading platform offers. Among them, how do you choose the right indicators? After all, there's no point cluttering your charts with tons of indicators which yield conflicting signals. This video will look at the best technical indicators for day traders, which is perfect for beginners who are looking to day trade. These technical indicators will remove a lot of guesswork out of your trading and help you find high probability day trading setups. So make sure you watch it till the end. While many traders strictly trade off price action, I know many of you love using indicators to assist you in your analysis, and that's rightfully so, because indicators can act as good filters while making your analysis more objective. Trading purely based on price action often requires a high level of experience and intuition. It is highly subjective, and beginner traders who have not accumulated sufficient experience may find it hard to interpret the market in real time. Such traders can benefit greatly from using technical indicators. Before moving on, we are currently doing a giveaway for our premium Forex signals, which we usually charge $99 a month for. If you want to participate in this giveaway, look out for an emoji throughout this video. Once you find the emoji, like this video and comment on what the emoji is, plus win Forex signals in the comments section. We will announce a lucky winner in the next video, so make sure you subscribe to the channel and hit the notification bell to know when the next video is released and whether you have won. When it comes to understanding indicators, I like to classify them based on what kind of information they offer. I put them into 4 categories: trend indicators, momentum indicators, volume indicators, and volatility indicators. With more indicators being created each day, there are obviously more categories, but most technical indicators fall into one of these categories. Most training indicators only indicate one piece of information. For example, the moving average will provide you with information about the trend, but not about the volatility. The average true range indicator, or ATR in short, gives you information about the volatility but doesn't provide you anything about the trend of the market. You might be asking why I'm taking the time to share this with you. Well, because the 4 technical indicators that I will be sharing with you shortly all reveal more than one information when you plot them on a chart. In fact, the 4th technical indicator is my personal favorite because it tells you the trend, the volatility, and even potential support and resistance level. Sounds cool? Let's dive into the first indicator, which is the Heiken Ashi. It provides a visual representation of both trend and momentum. A Heiken Ashi chart smoothens out market noise, and hence you can see that the price action is much clearer on this chart. A typical candlestick chart does not consider the previous candles. Each candlestick is independent of each other and shows the price action for that particular period. The Heiken Ashi chart, on the other hand, uses information from the previous candles. In essence, each candlestick is not independent of each other. Now you might ask, how is the Heiken Ashi's candle calculated? Well, the open price of each candle is calculated using the previous candle's close and open prices. Unlike traditional candlesticks, which have their own high and low, Heiken Ashi candles' high and low are determined by the previous candlestick. Here's a side-by-side comparison between a typical candlestick and a Heiken Ashi candlestick. Now, I want to show you why this is such a powerful indicator and how to use it, so keep watching. When it comes to using the Heiken Ashi candles, the candlestick size, relative direction, and color will help you determine the trend and market momentum. Green bodies with no lower shadows indicate an upward trend, while red bodies with no upper shadows indicate a downward trend. If you see a doji candle appearing after an uptrend or downtrend, that indicates a possible reversal. Price consolidations can be easily spotted when 2 or more Heiken Ashi doji candles are formed. See how simple it is? It tells you both trend and momentum. Now, what is great about the Heiken Ashi candle is that it also tells you about market sentiment. To gauge the market's sentiment, look at the candle's color and size relative to the length of the shadows. Big green bodies are signs of bullishness, while big red bodies are signs of bearishness. Smaller bodies, on the other hand, hints at a slowdown in momentum. And that's the first indicator that you can consider incorporating into your day trading. If you thought that was super helpful, you won't want to miss out on the other three. Next up, the second indicator is perfect for all the stock traders, and it is the volume weighted average price, VWAP in short. VWAP gives you the average price of an instrument based on both volume and price. Many institutional traders pay a lot of attention to VWAP because it provides insights into the trend and momentum. While the VWAP appears common, much like a moving average which is a single line, it is highly effective. By looking at where the current price is relative to VWAP, we can tell if an instrument is cheap or expensive for that day. You can use it to help time your entries and exits, while also determining if momentum have shifted. Now let me show you how to use the VWAP. When you see price exceeding a rising VWAP, that's a buy signal. Conversely, when you see price trading below a falling VWAP, that's a selling signal. Remember, these signals take into account both price and volume, so these are reliable signals. The VWAP can also be used to detect trend change. This is relatively simple. If price stays above the VWAP, it signals that the market is in an uptrend. And if the price stays below the VWAP, it signals that the market is in a downtrend. Now, there's one final use of the VWAP. Pretty cool, huh? VWAP can also be used as dynamic support and resistance. Think of them like your typical support and resistance level where price is expected to bounce off, except that the level is constantly changing because it is dynamic. You can use the VWAP as dynamic support and buy, and as dynamic resistance and sell when price retraces. The third best trading indicator is the MACD indicator, otherwise known as the Moving Average Convergence Divergence indicator. I've previously done a very in-depth video covering this indicator. I highly recommend you to check that out after this video. I will leave a link to that video at the end of this video. Now, the MACD is one of my favorite indicators because it is a momentum and trend indicator. The MACD converts two trend-following moving averages into a singular momentum oscillator by subtracting the longer moving average from the shorter one. I will do a brief run-through about how this indicator works nonetheless, so make sure you keep watching to understand how the MACD works. The MACD indicator has three components: two lines and a histogram. The MACD line is the faster line on the indicator. It reacts faster to price changes and is more sensitive. The second line that you see here is the MACD signal line. It is slower and less responsive. Then we have the MACD histogram, which represents the difference between the MACD line and the signal line. The bigger the gap between the two lines, the higher the MACD histogram bar will be. When the MACD line is above the zero line, the shorter period moving average is above the longer period moving average. This indicates that the market is bullish, very much similar to a typical moving average crossover. You will also see that the MACD histogram is positive and is plotted above the zero line. The converse is also true. When the MACD line is below the zero line, the shorter moving average is below the longer moving average. This indicates that the market is bearish. You will also see that the MACD histogram is negative and is plotted below the zero line. When it comes to day trading, the most important thing to observe is the interaction between the two lines and the positions relative to the zero line. I will show you the two powerful ways to use the MACD indicators for day trading, so keep watching. The first way involves using the two MACD lines. When the MACD line crosses above the slower signal line, that is a bullish signal. Conversely, when the MACD line crosses below the slower signal line, that is a bearish signal. Think of it like a typical moving average crossover. The second way involves identifying divergences. A divergence occurs when the price action on a chart and the MACD direction are in contradiction. A bullish MACD divergence occurs when price action makes lower lows but the MACD makes a higher low. A bearish MACD divergence is the opposite and happens when price action makes a higher high but the MACD makes a lower high. This is just a very short snippet of how you can use the MACD. In the MACD video, I go over 4 powerful ways to use it. Again, I will leave a link to this video and you definitely want to check that video after watching this video. Finally, we have the last indicator, which is a powerful indicator that shows you the trend, volatility, and even potential support and resistance level. Any guesses? Well, it is actually the Bollinger Band. So stick around because this indicator will drastically improve your ability to day trade. Bollinger Bands are like price ranges placed on a chart that represents volatility. You can see that it consists of the upper band, the lower band, and the moving average in the middle. Typically, traders use the 20-period moving average setting with an upper and lower band of 2 standard deviations. The Bollinger Band is particularly useful for day trading because it tells you the market volatility while providing you information regarding periods of consolidation, periods of upcoming volatility breakouts, and price targets all at the same time. When volatility is low, the bands contract. When volatility is high, the bands widen. This is essential information for day trading because you want to be trading only when there is volatility. There is no point in trying to capture a good trade in a narrow market with no volatility. The upper and lower band also function as dynamic support and resistance level. You can opt to use them as your entry or exit target depending on the circumstances. It can also function as a filter to avoid buying into resistance and selling into support. A rather common day trading strategy is to use the upper and lower Bollinger Band to trade pullbacks into an existing trend. When combined with market structure, price action, and other confluence factors such as a trend line, this can be a high probability trading setup that you focus on day in and day out. And that's the 4 best technical indicators that I recommend for day trading. Just to recap, we have the Heiken Ashi, the VWAP, the MACD, and lastly, the almighty Bollinger Band. Before I end this video, I want to remind you that the best indicators can vary from person to person. You have to find indicators that suit your personality and trading strategy. The key is to be consistent with it and not consistently overload your charts with new indicators day by day. Whichever indicators you choose to use, make sure to spend some time backtesting them and thoroughly understanding them. You may find that certain indicators do better for a particular instrument and not work for another type of instrument. So spend some time finding the right indicator for the instrument you are trading, and remember that more indicators on your chart don't necessarily increase your odds of winning. Your chart may be too cluttered and end up confusing you. And that's it for this video. I hope you learned something useful from this video. Like this video, subscribe to the channel and comment with the emoji plus Forex signals to enter yourself into our giveaway. If you have not found the emoji, that's a sign that you haven't been paying attention. So pay closer attention and rewatch this video. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. As promised, I've included a link to the MACD video, which I highly recommend you check out right away. Thanks for watching. I'll catch you in the next video.